It's Omar. It is January 25th, 2018, 8:10 p.m. in the evening, and I wanted to make a video building my watch list for tomorrow. I also wanted to talk about, buying breakouts. My plays for today. This was my watch list for today that I made the videos on. Was like pretty deadly accurate. It was phenomenal to see. And a bunch of my actual alerts triggered, and one of them was by the breakout if it holds PTON, if it holds 60 cents. And so yesterday, if you watch the video that I created, I had, this was the higher day yesterday, so I had an actual alert. I created an alert yesterday. Oops, sorry about that, guys. I had created an alert yesterday saying, hey, if it breaks out, if it breaks 60 and holds, let's put it this way. So I think I have it here. Let me go to watch list. I don't know if it's still there because I was messing around with this. Let's do triggered. Yeah, here it is. So I said, this was one of the, I said, buy the breakout if it holds 61 cent, right? Because yesterday's high was 61 cent. So remember, guys, this is how you buy breakouts. So this is what happened. The market opens, right? Oh, let's go here. So the market opens today, okay, and look what happened. So you got this little pullback, and it starts ripping, and it gaps up, and it breaks out, right? So it breaks out here, it breaks out the 61 level. So this is the new high, right? What did I tell you, everybody, yesterday's video? I said you do not buy the breakout, because what you want to do is you want to see the stock test that breakout level so that it's now a new key support level, and then you buy. Because sometimes you'll buy the breakout and the stock may fail immediately afterwards, all right? And so what happens, look what happens. The stock gaps up, it pulls back a little bit, and it gaps up again. So, in theory, you could have bought here, and you could have bought here because it's a higher low. But me, I really like to see, I don't like to chase, I like to see a pullback towards that breakout level to kind of take to buy the stock. And look what happens here, guys. The stock caps up all the way to a high of 65 cents, pulls back all the way right to that 61 level. Look, it got a little bit below it, and then what happens? People see that it's gapping up, and look what happens. Here's the pullback right here to that 61 level, right? The low is 61.2, and then it gets a volume surge because people see now that that breakout level, which was resistance, is now support. And that's when I actually took a buy right into this candle right here, right into this. I got executed at like 61.8 something, and I used E-Trade. I went in real heavy, and I'm still in the stock. Actually, I never sold my position. I'm still in. So nice trade, and you can see it gets above the 50-day moving average, pulls back, bounces off the 50-day moving average. This is the 50-day simple moving average. This is the 200-day simple moving average, and then it just continued to gap up. Pretty much all day. Look, it rode that 50-day moving average. Kind of pulled back, but it's still above VWAP. It's looking good. So this is gonna be on my watch list for tomorrow. Like, this thing's been on an incredible run. It's only had one red day over the last 1, 2, 3, 4, 5, 6, 7, 8 days. I mean, I don't know how far this is gonna go. If you look at the chart history, I mean, people, man, whoever owned this at like 0.5 cent, I mean, they probably, people had like 1 million shares of this. They're probably rich right now. But I don't know what the chart history is. You can go back. I'll go to max available and see. Like, this is a stock that, yeah, it's never been this high before. So I'm expecting this to get crushed at some point. I don't know when that's gonna happen. It's let's do 1 year, 1 day to put it back. Tomorrow it may pull back. I don't know, but this is what we're gonna do. Just very simply, we're gonna create an alert. All right, you can open up a Thinkorswim account with no money, okay, and it's fantastic for charting. It's terrible for trading, day trading. I mean, if you're a swing trader, options trader, it's great, but for day trading, it's terrible because the executions really suck on Thinkorswim. So I'm just gonna put a note. Buy the breakout if holds 78%, 78 cents. So if it breaks 78 cents, I'm not gonna buy it. I'm gonna wait to see it retrace and hold that 78-cent level, and that's when I would buy. Matter of fact, let's talk about a couple of other stocks real quick before I build the rest of the watch list. This was another stock on my watch list, PBR, and I said I had two alerts, one at the low and one at the, which would have been the day's high, which was that 1328 level. If you go back and we look at my alerts, so let's see, triggered PBR, right? I said, let's look for it. Yep, I said, right, buy the breakout if it holds 1328, right? Yesterday that high was 1328, and if you notice, look what happens here, guys. Market opens, stock breaks above it, but look what happens. It immediately pulled back. And that's what happens. A lot of the rookies, a lot of newbies, they'll see it break and they buy. And that's that bullshit Ross from Warrior Trading gap and go bullshit that I don't, you know, I don't subscribe to. You know, sometimes it works, but it's like, I don't know, it's very risky. You know, so, you know, it gaps up and then it pulls back, you see? And it pulls back. It came down all the way down to 1309, and this is the previous day's close price, and it just kind of held that support. And then you start to see the move back up, and if you notice here, it's like forming this like wedge pattern. So it's forming higher lows as it starts to gap up. As you can see here, it's, you know, it's forming this wedge pattern, and it's going up and up and up. And look what happens once it breaks that 1328 level, right? Look what happens. It holds. And, you know, it's an indecision candle. People are not sure where to go. And then it gets that volume surge right here. And then it just starts moving because people notice, oh, shit, it's holding that 1328 level. Now resistance becomes support. And that's where you take it for a ride. You know, and what I like to do is when I'm in a stock and it's gapping up, I'm just riding the trend. You know, so here we have our trend line. It breaks here. And if I see another trend, like if it's going this way, I just simply just put a trend line in the direction that it's going. And as long as it's in that trend, I'm good. And theoretically, well, once it breaks the trend, you can sell. Once it broke below the 50-day simple moving average, you could have took it short. And you could play it both ways, risk it off the higher day. And you could have made money both ways, you know? I didn't trade it. I only traded that one stock, POTN. You know, so that's kind of how you could have traded this today. And you know, it's now it's under the 200-day moving average. Now it's under the VWAP. You know, it could, in theory, tomorrow, if it breaks that 13, and if you notice right now, it's at 1320.32 is the biz at 1326. You know, it could wash tomorrow because it's been on this run, and you know, at some point, look at this. You gotta expect it to try to fill the gap below. So at some point, this thing's gonna pull back and it's gonna have a crazy wash. I mean, this could probably be on my watch list tomorrow too, for a simple entry, but for a potential short. I mean, for a potential short. But you know, we'll look at a couple of other stocks. One other thing I wanted to show you. Let's look at a higher price. Well, let's look at PBRA. This is what I want to show you too. I want to talk about this. This was another stock that was on my watch list. PBRA. There we go. Wait a minute. Why is it doing that? PBR. There's something wrong here. I don't know why it's pulling up the same two stocks. That's weird. Anyway, let me pull up another. Let me show you XNet. Let's talk about XNet, and then let me talk about Riot. I just want to show you two other examples of like stocks. Let's say you see a stock moving. Let's say XNet. Let's say this wasn't on your watch list and you start looking at the stock. Let me remove all the drawings. Market opens, right? So you see stock gapping up, and you see the stock gapping up here, right? You're looking at the previous day's close. You know, its high is 16. I'm sorry. Oops. Let's go back here. Oh no, this is not what I want. No, I'm sorry, guys. Riot is what I wanted to show you. Sorry. I want to show you a good example. Was it Riot? No, it's Roku. Because I want to show you another pattern that you can play that's pretty good. Let me remove this. Let me remove all this stuff. Clear drawing set. So let's say you see a stock market a stock breaking out. Like you see a stock starting to move. So this thing pre-markets was starting to run. It doesn't have a lot of volume, but you can see, you know, it's starting to move. It was here at 42.14 and it's gapping up and it hit a high of that of 43.02, right? So that's the high. That's the pre-market high, right? So oops, sorry about that, guys. Here's 43.02, right? I'm gonna show you guys something. Let me fix that. Edit 43.02. Okay, so you see that's the high, right? Market opens and you see it can't get right back to that pre-market high, and it starts washing, and it, you know, kind of hits that 200-day moving average. That's what the yellow line is here, and you know, this is the previous day. I'm sorry, that's what the purple line is, and this is the previous day's close price, which is acting as support. Support, and it breaks below it, and now it breaks below the previous day's close price, which means it's red on the day at that point, right? And then, you know, it starts consolidating here, it finds its support level, and it starts gapping up, right? Now, remember, we have a trend line here at the pre-market high, and look what happens. The stock starts gapping up, right? And, you know, it breaks above the 200-day moving average, it breaks above the 50-day moving average, it breaks above VWAP, so it's starting to look bullish, right? Now, look what happens, guys. The stock gaps up. So here's the pre-market high. It breaks above it. You don't buy it here. Even though in theory you could. This is what Cameron Ross would teach you, like to buy right there, like, and then scalp it for a quick win. I'm not. That's just not. I just think it's a shitty strategy. And when a bear market comes, I don't know what he's gonna do. But you know, so you see you see how it gaps up. And then, you know, these are the Fibonacci retracements. That's what these lines are. And then you see, you know, it's starting to gap up. Now look what's happening, guys. That breakout level, which was a key resistance level, is now acting as support. And you see it's kind of consolidating sideways. And for a second, it breaks below it. But look at the 50-day moving average here. And now it breaks above it. And now it's holding. And now you're getting a volume push. And when you get that volume push here, look, the volume's coming in and it's above the 50-day moving average. And this is where you would get in. And look, you could have rolled this up. It consolidated sideways and then got to a high of 44.60. And, you know, the 61% retracement actually got rejected by it. And you could have took it short down, you know, especially once it broke below the 50-day and 200-day moving average. You could have took it for a nice short. Now, just to tell you the way the fibs work is, yesterday I showed you like a lot of like from low to high. It also works in reverse. So this is, you go from the high to the low, and this is the trend. So remember, it's either low to high or high to low over a 2-day period. And you know, we got to make the fibs, in order for it to work, you got to be to the exact number. All right, you can't be off. Even a penny can, you know, mess you up a little bit. So you want it to be high. You want it to be right, I'm sorry. And you can see here, you know, that this is the, over the 2-day period, right? This was the high yesterday, all right? And this is the low. It hit the low yesterday too. Never got below that low. And you can see how it just started gapping up, and it broke above the 23% retracement, got rejected by the 32% retracement. And then, you know, it kind of gapped up, broke the 50, and got rejected by the 61% retracement, which kind of technically means that it's still in a downward trend. That's what it's supposed to mean. You know, so, and it's breaking below the 200-day moving average on the 1-minute chart. So, you know, in theory, it could give back some gains tomorrow. We'll see. But that's what I wanted to show you guys in terms of like how to buy breakouts, okay? Even putting aside Fibonacci and all that other shit, you know, I like to mess with. You know, it's basically about support and resistance, all right? And, you know, you can use multiple, let me remove this. You can use multiple time frames to confirm, you know, your position, you know? So if it's that 43.02, let's put that back, you know, you can look on, this is a 5-minute time frame, and you can see it on the 5-minute time frame how it's starting to consolidate. Here's the 15-minute time frame, and you can see here that 43.02, look, and there it is, nice, easy, breezy. This is telling you, yeah, man, the volume's coming in and it's ready to rock and roll, you know? So, you know, it's always good to have multiple time frames to give you a confirmation on where stock is moving. I always have the 1, the 5, the 15, and the 1 day. And sometimes if I'm trading like a low volume stock, I'll use the 1 hour, because then you can get a better sense of what a stock is going to do. That's what I like to use. Everybody's different. All right, so I wanted to give you that. Now all my other stocks did exactly what I said. I even threw a gem this morning, STM, on my Twitter. I said buy the breakout if it holds the pre-market high. Damn, I haven't even started making my watch list, and this video is getting long. But yeah, I had this 23 at the moment. I'm sorry, no, I'm sorry. Where did I get my number from? Yeah, I think it was at that point it was yesterday's high or something like that. I'm trying to remember where. Oh yeah, so this was the high. Where did I'm trying to remember what I did. Oh yeah, I think yeah, at this point this was the high of day pre-market, and I said if it holds that 2355 level, it can, or 2360 level if I remember, it can move, and you see it kind of gaps up, pulls back, holds that level, and then just runs pre-market. And you know, it gapped up all the way to 2433. I thought it could potentially hit $25, and then it kind of just gave everything back, you know. And I wrote it on my Twitter somewhere. I'm trying to remember. I took a screenshot of it actually. Let me go back to my Twitter just so I can show you guys. I had put it yeah, and you see I was just showing you, taking pictures. Here it is. Yeah, 2380. I'm sorry. That's what I was looking at. So here was the high. This was the high. It was that 2380. And I said, you know, and this was pre-market, and it hit this high, and I said if it can hold that 2380, you know, then it can move, and that's what happened. So, you know, it hit that 2380, and I think it was like easier to see. Let me take all this out. Which was, I think it was here. Yeah, here it is. This was the pre-market high, and I saw that it was getting volume pre-market. I'm sorry about that, guys. Oh, because I have a different thing. Yeah, here it is. So, you know, I saw that the pre-market high was 2380, and my thesis was, hey, you know, if it could break above this and hold this level, it's gonna rip. And sure enough, look what happened. It held, you know, it gaps up above it, kind of consolidates. This just wasn't a lot of volume here, you know, just a few thousand shares traded, but it held it. It broke, you know, it kind of broke above it, held it, and then it just kept going. And look, this is why having multiple time frames and using the 200-day simple moving average is so important. Look what happened on the 15-minute time frame. Stock opens, it literally touches the 200-day moving average on a 15-minute time frame, and then it just, so what was this? The high was 2431 on the, well, it's not reflective of it now, but back then, that right there, that was exactly touched the 200-day moving average and rejected it and just sold off. The 200-day moving average is probably the most important moving average that's used, especially by the big institutions. You know, once you look at this on the 1-minute time frame, the 200 moving average is down here, but you know. And you can see it broke below it for a second, got above it. But once it broke below it again, and you see it's below it on the 200, on the 5-minute, and on the 15-minute. I mean, it's especially when you see it on the 15-minute, that means it's very bearish, you know. And it gave a ton back, you know. So, you know, that's what I wanted to call out. Now let's build our watch list for tomorrow. So I'll try to make this quick. I'll do like maybe 5 stocks, and then I'll stop the video, because I know I've been yapping for a long time. But I think this is good information. And guys, this is the same shit that you see in all these other videos that, you know, these DVDs that you buy. It's all bullshit. Save your money. The shit that I'm giving you right now is the same shit you'll see in a video. So I said POTN, right? We're going to put that on our watch list. So that's the, you know, that's, everybody's going to be in this tomorrow trying to drive it up. I think, you know, maybe tomorrow it crashes. I wouldn't buy it unless it broke and held 78. That's the only way I'm buying it. And I probably, you know, I'm in it now, so I may sell pre-market, and I can't sell till 7 a.m. So, you know, hopefully it doesn't crash before then. But we'll see. I mean, all signs are, you know, it's still very bullish, you know. So I'm looking at all the time frames, it's still looking good, but it's so overextended that you gotta expect people are gonna take profit and it's gonna fucking crash. I wouldn't be surprised if it gets back to 30 cents. We'll see. All right, next up is, so let's start going through the watch list. So what I like to do is look at the stocks. Normally, I used to look at the highest percentage gainers. I look at the stocks, though, with the most volume. I like to look at volume. So Mankind was a stock, you know, this has legs. This is a stock that really moves when it has some news behind it. I don't know what made it move, to be quite honest with you. But if you look at the yearly history, I mean, this is a stock that it's had 1, 2, 3 green days, and each day it's getting more and more volume. So it had 2 million shares traded 2 days ago, 3 million shares yesterday, and then 38 million shares. So, you know, it has, in the chart history, it's done it before where it's gotten, you know, more volume, where, you know, it went from, like, this was back in October of last year. It went from 12 million shares traded to 18 million shares traded to 75 million shares traded. And then it had a couple of red days, and then it had another green day. So this stock has the potential to move. We'll see what it's going to do tomorrow. It's, you know, it gave back some of its gains, but it's still looking, if you look at all the time frames, it's looking bullish. You know, I don't know what the news is, but it's absolutely going to be on the watch list. It's a low float stock, meaning, actually, no, it's not a low float stock. It used to, I think this stock at one time was a low float stock. It actually has 118 million shares, so no, it's not a low float stock. But but what I would be doing is to buy the breakout over 405 only if it holds. Remember, guys, because what happens is, this is what's going to happen. If the stock breaks 405, it's going to dip below $4, and then it's going to break above, back over $4. It has to hold that 405 level for me. I want to see it test it in order for me to buy it. So buy the breakout if it holds 405. Now maybe, you know, tomorrow it just crashes. We'll see. I mean, I don't know. So I have my alert set for mankind. You know, but it looks, you know, it has this little tiny gap to fill, so below it. So I don't know. We'll see. But, you know, all indicators based on the chart history, this may have a couple of days in it. Maybe it has another day in it. We'll see. LTBR, this was on my watch list. It did exactly what I said it was going to do. I said it was probably going to tank because it had this gap to fill below. And, you know, it did exactly that. It tanked, you know, it tanked. Tanked right at the market open. You know, like, you know, and it's interesting. Look what happened. You know, I love Fibonacci's and I love to buy dips off Fibonacci. Look what happened. This stock retraced. So remember, the way it works, it went from the low, which was 205. This is where the trend started, right? 205 was the low. Let's see. And the high, oops, I gotta put back Fibonacci. Let me go back. Drawing tools, Fibonacci retracements. It's right there. So we're gonna go to 205. And then we're going to go to 480, right? So, right, the stock rips, right? Pre-market, it gets to a high of 480, right? And then it just completely tanks, right? When the market opens. Look what happened. The stock retraces 61.8%, which is like the holy grail of retracements, right? And it holds that 61.8% level, and you could have dip boarded off that. And that's what I like to do. I love to, you know, look for a key retracement at one of these levels and buy the dip, you know, and just really quickly scalp. And, you know, if you bought the dip, let's say you got executed here at like the 318 level, you know, you could have held it to like that 337 level. You know, me, I go 2,000-3,000 shares, you know, and I make like 800, 900 bucks quickly on a stock like this. You know, but this dog shit, I don't know if tomorrow it's gonna move. You never know. You know, it's possible, but I don't think it is, only because, let me remove this, because it has this gap to fill all the way down here at $2, and it almost filled it completely. It didn't. It did a partial gap fill, and the stock doesn't have a history of running, you know. So at least on this 1 year chart, I mean, I can go back, let's say 5 years, and, you know, and we can see, I mean, this stock has been over 5 years. It's gotten as high as, look at this. So back like in 2015, it had one big day where it opened at 680, hit a high of 890. It hit a low of 655, closed. But look what happened the next day. It opened at 85, hit a high of 90, but it closed at 675 and then tanked. It doesn't really have a history of holding its highs. So, you know, based on that, you know, if it has a couple of green days, you see it just gives it all back. So I don't expect this to do anything tomorrow. I mean, if you can find shares to short, you may want to see if it's going to spike and then short it back down. I'll put it on the watch list just because it's volatile. You know, you're gonna need to find shares. You're gonna need like a center point or an IB, and you're probably gonna have to locate the shares before the market opens if you're intending on shorting it. I don't know. I think there's other plays. Let's keep moving on. So PTON we already looked at. TAL is a higher price stock. This stock hit a high of $34. Its high is 36. Look at this. It has a gap to fill below. It went from 28 to $33. Look at this space. Now, what you like to do, what I like to do is I like to look at, you know, let me look at 1 year. I'm sorry. I like to look at over the last year and see, like, has it done this before, and then what was the result. So if I'm looking at the yearly, it's been riding the 50-day moving. This is the 50-day moving average. It's just been riding the 50-day moving average. Got to a high of 36, and then, you know, look at this gap down below, and it retraced, you know, and this is 38% on the Fibonacci. And, you know, then it just kind of, you know, took off again. So I don't see it on a 1 year. Like, there's really nothing telling me what it's done when it's gapped this high. But my expectation is that tomorrow people are going to take profit. So what I would be looking to see is if it breaks, so I'm going to put two alerts. All right. So if it breaks above 34 and holds, I would go long. So let me add an alert. Break above 34 and hold, go long. All right, now you can see that it, oops, let's replace, let's put at 434 to 34. All right, okay, great. So now, and then you can see it's holding. This is like a clear support level right here at, it looks like 33. It looks like, what is this? 33, the low 33.15, 33.11. So 33.11, where is this? 33, yeah, 33.11. So 33.11 seems to be, so we'll fix this. Oh, crap. I want to do an alert. So let's do this. Yeah, it looks like. All right, so create alert at 33.11. So short, break below 33.11 support, especially if below 200 SMA. All right, and this is on the 1 minute time frame. Well, because you have VWAP here at 32.72. So if it breaks below, it's still bullish because it's above VWAP and it's above the 50-day moving at. Like right here on the 1 minute, you see it's kind of like it's holding it. But my expectation is that at the market open, this is going to tank because people are going to take profit, and then maybe you might see a continuation up. I don't know. I mean, what I normally would do is I would look further back into the actual time frame. So I go back like 5 years and then kind of look to see it. But over 5 years, this stock has never been this high. And I don't know anything about the company. So, you know, I would have to do more research. But I like to play the technicals. So what we'll see, like if it breaks below that, I think it's going to be a good short, at least to VWAP. And if it breaks above it and holds, who knows where it's going to go, you know? We'll see. So yeah, I'm gonna put this on my watch list, even though it's more expensive. Now, guys, if you have an account, let's say you only, you know, let's say you have 5,000, 10,000 bucks, even 100 shares can get you a nice, you know, you can make some money. Look, had you bought this on the open, let's say, just hypothetically speaking, you bought this at the open and you held it, you know, you could have made on 100 shares, you could have made 400 bucks. It's nice, you know, and it's low risk because it's only 100 shares. These higher price stocks, you can take 100 share positions and do very well. They're just, the spreads are crazy. That's why I don't like to mess with them too much. But I do. Like, I'll trade an Apple or Netflix. I don't care. Next up, FE. So far I got 4 stocks. FE is another stock that I like this because, you know, it's holding its highs. This is a very volatile chart. You can see it. It gaps up, goes back, gaps up, goes back. I mean, this thing is up and down, you know, and it's on its way up. I'm gonna look for something a little bit less expensive, just because the people who follow me, I know you know, ain't gonna want to play these higher price stocks. Now NYSZ, this is a stock that, you know, it's a dog shit company, but you know, it's been like kind of just up and down. It's been pretty volatile over the last few days. What I would be doing is this stock here. Oops, let me go here. I would then be looking at that 265 level, because if we look at it, you know, it's getting volume. It had more volume. It had 9 million shares traded. Now let me go to 1 year, 1 day. I don't know why. I don't know why it's showing that it's red, because the stock is above the previous day's close price. I don't know why it's giving me a red candle, but you know, it's getting more volume. So it had 3 million shares 2 days ago, 2 million shares yesterday, and then 9 million shares today. So, you know, and it's holding that 61% retracement. So, you know, you might see it's, but you know, it's bearish on the 1 minute time frame. On the 15-minute time frame, it's below VWAP. It's bearish on all the time frames, but you know, it's above the 200 simple 200 moving average on the 15-minute time frame. So, you know, we'll see. So I would only, you know, pay attention to this if it broke 265. You know, I mean, you could short it. Like if it broke below the 230, I would probably short it if it especially if it breaks the 230 right here. But you know, this stock is hard because it's low float. It's hard to find shares. If you don't have a center point, it's gonna be hard, and you gotta locate the shares and all that. So I'm just gonna look at this in terms of a buy strategy. So you know, buy if breaks 265 and holds. All right, so I want to see the breakout. I want to see it, you know, pull back, retrace back to that 265 and hold. And you know, if you look at the time frame, so let's say if I look at like a 10-day, 30-minute chart, just to see, you know, this stock has gotten to a high of 296 over the last 10 days. So, you know, because of that, you know, it does have the potential to continue up, but that's what I would be looking. I would be looking to see what are the next resistance areas above it. So it does have it has a lot of resistance overhead, you know, so you got to be careful if it breaks above it and holds. But if it breaks above it and holds 265, that means that it's probably gonna break through some of this resistance, but we'll see. Now, am I gonna put that on the watch list? Not really. I just wanted to show you how I would look at this. Let me see. I'm gonna put one more stock on the watch list. I'm gonna continue to build my watch list after the video, and maybe I'll post it up on Twitter for you guys. Here's a nice one, IOVA. This is a stock that, you know, is, let me go back 2 day 1 minute. Wow, went 5 points. That's awesome. And this would be something I would be looking to short. Why? Because look, it has this gap to fill below. You see it just gapped up this really high, and then it has a gap to fill below. And if you look at the yearly, it has never, you know, over the last year, it has not been this high. So it's in the yearly high right now. So what I would be looking to do is, I would say, okay, it's at $15 right now, right? So, you know, and it probably pre-market will probably keep moving. Now, I don't know what caused this to move. I'm just playing technicals right now, and I'm gonna put this on the watch list. So we're gonna say buy breakout if it holds 15. Now, if IOVA, we'll put that there. Now if okay, now my expectation is that it's gonna give back some of this tomorrow. It has to, right? So, you know, what I would probably be looking to do is, and is it a low float? No, it's not a low float. So I would say, okay, what's the key support level here? And it, you know, even though it dips and it holds, this is the low, 1401. But I would probably, if it breaks this, it looks like the key support level here is that 1430, 1445. So I'd probably be looking to short this if it breaks below 1445, and you know, see it go all the way back to VWAP. So I'm gonna put, because it looks like a support level here, keep support level, and if it breaks below 1450, you know, 1450 is a psychological resistance barrier. So I'm gonna put now honestly, if it starts tanking at the open, you can just let's say it doesn't pre-market, it has no volume, the market opens and it starts tanking, then you can short it risking the 15 if you get an entry fast enough. I don't know if this is, it's easy to borrow too. It's a bioceuticals company. Probably had some good news on bio, probably some study. Yeah, here's this up, yeah, up there 27% probably preliminary phase 3 data, treatment showing three of what, eight patients for squamous treatment of cervical carcinoma. So they had some sort of response. That doesn't mean that, you know, that doesn't mean that it's you know, it's gonna do anything. It's bullshit news. I expect it to give it back. So me personally, I'm gonna use this key support level right here of what is it, 14 low of 1435, 1430. So yeah, let's say 1430. All right, 1430. So I'm gonna create an alert, and I'm gonna say potential, because it may not, doesn't mean that it's gonna break below it. Potential short at break below 1430, because it may get to 1430. See how it responds. Could be dip buy, because it could potentially get to that level, right? And then, like, you know, people, you know, maybe it doesn't dip below because people start to cover there, and then it just runs. It just continues to run. So it doesn't mean that it's gonna. You gotta see how it responds to this number, to this 1430. All right, so those are the 5 stocks that I put. I'll continue to build my watch list. Obviously, there's more stocks here, like ITUS would absolutely be on my watch list too. You know, if it breaks, you know, it's been running crazy. If it breaks above 643 and holds, I'm in. If it breaks below, it looks like it found support at 601. If it breaks below 601, or you know, and it can't, you know, if it clearly breaks below it, I would short it. And let's see, is it and it's hard to borrow, so. You know, if it's hard to borrow here, it's probably gonna be hard to borrow in other brokerages. Well, that's not necessarily true, but you know, so we'll see what happens. I am going to put this on my watch list as well, so I'll leave you with this last one. But I'll keep building. I'll add like 2 or 3 more stocks. I'll put my alerts, and then I'll just post it. All right, guys. So I hope you found this video helpful. And remember, you know, I'm teaching you. Save your money, guys. You know, my advice to you is look for those weed stocks like ICB, ACB, FF. These are weed stocks that are probably going to continue to run. So you can look at multiple weed stocks and potentially, you know, get in. All right. So that's probably like the safe swing trade right now these days.